Hello and good morning, traders, and happy Monday. It's 8 a.m. Chicago time on the 17th of October, 2022. Welcome back. How are you? It is episode number 2337. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm fighting off a sneeze here just as the broadcast starts. Sorry about that. Mixed posture this morning. We've got markets that are not, something's going on here. Markets in the US are, is this updating? Does this seem like it's updating to you? No, it isn't. 1 second. We will restart and we will get it going. How was your weekend? How was your trading last week? In my opinion, a relatively tough week overall. So, looks like it is correct and it is updating. And yeah, okay, just making sure that this thing is actually keeping up to date. Here we go. We'll fire it up again. Version 2.0. There we go. Okay. Yep. So mixed posture overall. I'm showing that something's up here with my data. Yeah, it's my data. Just need to restart my data. For some reason, my IQ feed's been dropping this morning. I don't know if anybody else has been seeing that, but this thing is going to populate all of a sudden. But from what I'm seeing, it really shouldn't be. The S&P isn't really down, is it? Let's take a look. The S&Ps are 3654. They settled at 3599. So we should be positive on today, which should throw things off pretty badly once this spreadsheet updates. So I can't really rely on this spreadsheet right now. But let's forget the posture. And let's look at, let's forget the posture and let's look at the other stuff. So again, for some reason, the spreadsheet is not up to date. It looks like my feed is not up to date on IQ feed. But overall, we had Bank of America reporting today, beat by 5% on earnings. And then Charles Schwab also reported it beat by 4%. Bank of New York Mellon reported they beat by 10%. We don't have anything major remaining. The rest are relatively small. And then as far as the news driving this morning, there isn't all that much. There isn't much news flow over the weekend, but the biggest thing is the new UK Chancellor of the Exchequer, Hunt, walks back all of those fiscal changes that made the market believe that the UK is being irresponsible fiscally. So they walked all that back, which is should be cable positive. But just as a side note, this is the cable. This is the British pound here. Weekly chart going back to the 1970s. This is the pound US dollar pair, and you can see how dire the situation here is. We've basically pushed into and below the lowest low ever with this thing. Not ever, but all the way back past 1970, 1969 or something like that. So it's a pretty tough situation for the cable. Pretty bearish looking chart here. It's getting a bit of a bounce. It's trading at 113, but it's been here at 113 for about 2 weeks now. So that's the key. There are comments coming at 10:30 from that chancellor, Jeremy Hunt. So you want to pay attention to that if you're trading the FTSE gilts, the cable pairs with whatever cable euro, cable US. You want to pay attention. And then this afternoon, we're getting the monthly budget statement at 2 p.m. And then this evening, we get the Reserve Bank of Australia's meeting minutes, and then the 20th National Congress of the Chinese Communist Party coming into play this evening. Generally, big announcements are made, policy announcements are made regarding COVID, regarding growth, infrastructure, things like that. So the world will be watching what's going on there. As far as the S&P, one of the key, as far as the U.S. equities, one of the key things you want to note here on this chart is that the rotations increased last week. The week before, the rotations were at 8.5 points. What does that mean? 8.5 points is 8.5 points is the limit of what we would consider to be a normal move in the S&P, and that's now gone up to 9. It went up from 30 to 32 and a quarter. In the NQ, it went up, I think, 2 ticks. In the RTY, it went up 3 ticks in the Dow, and it went down a couple ticks in crude. And so overall, we saw an expansion of volatility last week, and that's where we stand this morning. I don't know why. I'm going to have to restart this software because it's just not behaving. Looking at the S&P has traded 242,000 contracts so far. Actually, I don't even know if that's true. Hang on. So far, the S&P has basically been rallying. I'm not going to pull up it's traded about 292,000. That's correct. It's right up here. 292,000. It's been rallying from Friday's close. Friday's close was quite bearish, by the way, in the S&P on a multi-distribution profile. Quick push higher. This is what was expected. If you recall, scenario 1 was looking for the market to be responsive up and then sell off, push the low, push the prior low, and then start squeezing lower. And it actually did that. So this is, for those of you who are here on Friday, we talked about this, that we're looking for it to pop up and push lower is the key scenario. But it closed pretty poor, pretty negative, right into the 3,500 handle. It has not spent much time there, and it popped right up. And now we are really pushing near highs. We've got a pretty decent range so far today, and a multi-distribution profile. If you look at this kind of faint orange profile, let me make these profiles a little. I'll fix that later, but I'm gonna make these profiles a little bit more prominent. Actually, let's just do it because I started doing it last time and I did not. Let's pull it up to 40%, let's say. So we've got a multi-distribution profile. We've got a market that is really in price discovery mode higher, and it's likely to continue to do so. What we did overall, so if we look at the TPO chart here, what we did overall is we did have this big impulse down. We had a bounce, and then we sat sideways for a few days waiting for news, and we dropped. We gapped down, and then we closed pretty poor. We gapped down into the prior balance. So we had balance down here, balance up here, and then we dropped into prior balance. And then from there, we just continued to put lower highs, lower highs, lower highs until we had that big reversal day, which I missed last week. Big reversal day, finishing near highs, giving the market a very kind of short-term bullish view. And then what we did on Fridays, we came in, we gapped higher, we tested up, and then we sold right back off into the fat part of this balance. And we ended up closing near lows. So if I was to look at Friday, if I was to produce a closing video on Friday, I would have leaned on the short side. I would have looked for the auction to continue lower. It looked like an incomplete auction to me. And so the expectation would have been for it to continue lower, which it did in the overnight session, but it's not able to hold on to these prices because we're trading up here. So what does that mean? The expectation is we did open in a gap higher, we tested up, and then we dropped, and we have a B-shaped profile. B-shaped profile is a long liquidation profile. When we open at the high, move quickly, and form a fat profile down at the bottom, this really speaks of long liquidation, weak longs getting squeezed out, and it generally speaks of weakness, structural weakness in the auction, and the expectation is it would continue lower. This is really, a pretty good bet in general, given that there was poor structure underneath in all of these single prints. On Friday, if you recall, as soon as it broke into those single prints, I think I made a comment about it in the Convergent Trading Mavens channel that, hey, once it breaks into those singles, it's very likely to just go right down the flagpole. I forget what the number was, but down here in the 3570 area, that's where I expected this auction to continue going, and it ran out of time. It did a good job of continuing to transition down throughout the day, but it took a bounce this morning, and we are now in the thin portion, almost in the thin portion of Friday's range. So given that it was unable to continue on a long liquidation profile, it was unable to continue lower, and we have reversed, and now we're above Friday's value on a B-shaped profile. What is this? Let me ask you, what does it say while I start IRT again? What does that tell you as a student of the market? What does this information tell you? What does it mean if the market goes into a long liquidation with a weak close and now it is above value for Friday? What is it saying? What's the conclusion we draw from this for today? Okay? Try to answer. Come on. I know there's like a 12-second delay, but it's not 30 seconds. All right. This software is starting. Let's see if it runs properly. I'm not getting any answers, so I'll answer it. What it's saying is balance. It's saying balance. So we are likely to be stuck here for several days is what it's saying. That's what this is saying. This is saying balance. This has found buyers. This has found sellers. The buyers closed strong on Thursday. The sellers closed weak on Friday, yet here we are in between. Balance. Did you guys type these right away? Because they're coming in now, and that was like 30 seconds ago. Balance. So this is the most important thing you should take out of this Trader Bite today, is that volatility up, the volatility down, and the way Thursday and Friday played on each other, given CPI, given all this important information coming in, the CPI, the Michigan sentiment, and so on. Knowing that information, key information. Remember, Michigan sentiment includes an inflation component which came out relatively hot. Given that information, what we now know is that these two profiles are filling each other in. So if I was to, I'm not going to keep them this way, but if I was to merge these, you'll notice that slowly we're getting a balanced profile, a fatter and fatter and fatter profile. So that's what we have, and we are up here. We're on this dashed line. That's what where we're trading at 36.57. So there's quite a base underneath us. There's a magnet underneath us, and this is likely to spend a good amount of time this week just chopping around. Okay, if I look at the high impact releases this week, there isn't all that much. We got the German zoo economic sentiment indicator tomorrow. We get inflation out of Canada, Great Britain. On Wednesday, we get building permits, housing starts. Those are movers, but they're not real movers. Thursday, we get existing home sales out of the US. We get the GfK consumer confidence out of Great Britain, the inflation rate out of Japan. And then Friday, we get retail sales out of Great Britain. So there isn't anything dramatically important for the Fed to deal with this morning or this week. So please be prepared for the market to be stuck in this range this coming week, given the way it has played out. Unless something new comes along, some new event kicks in, Powell comes out and says something, or Yellen or somebody like that, I'm expecting this to be a relatively aggressive balance. Aggressive because the volatility is elevated, but in terms of finding price and churning price, I expect that the price discovery process to be relatively sideways. So bear that in mind. Keep that in mind. The biggest driver remaining for this week, of course, is earnings. Lots and lots of earnings coming through, and those might change things somewhat, but really the expectation for earnings is that they're going to be relatively, they're likely to miss their guidance, which is bearish, but so far it's been better than expected. So I think there's going to be chop based on that as well. So that's the conclusion there. So that's what we're looking at. Let's clear this. So let's go back and look at the intraday. Here's the intraday. Here's what's happened. You know, we've had this really relatively orderly kind of selling stream, some aggressive reversals Thursday, Friday, and now we are bouncing back up. And as you can see, we've pushed to Friday's mid here. We kind of did that on Friday. We pushed to Thursday's mid right here. Pushed to Thursday's mid. It's kind of the mid, no matter where it is, seems to be getting some importance. And it really, we're just kind of walking back some of the stuff we've done. This 36.60 area is relatively important, pretty price action based structure, relatively weak because it's overnight. But I'm watching to see this morning for a reaction. The relative delta this morning based on MBO data is pretty bullish. You can see there's just a nice climb there. However, it's led by small lots. You can see the large lots are beginning to participate down here, but overall the small lots are pushing. Expect another indication that we're likely to kind of grind up very slowly, and that it's likely to be a relatively choppy and contested kind of jittery type of movement this morning. So I would say that you'll want to be on guard this morning and not let your trades take too much room, and don't set too high expectations for your scale outs. What am I looking for today in terms of expectations? So we can wrap up. Today we've made a nice little run. This is too much. This is too much. Okay, so today we're way up here. I'm expecting this thing to squeeze the high a little bit, continue in the trend that it's been in the overnight session. I expect the small lots and relative delta to continue higher. I expect this thing to stall out somewhere in the 3680 range, right in here, and then come right back, consolidate, and then grind its way up for the afternoon. I'm expecting this continued excuse me, this continued climb into Friday's high. Why? Because we have already given up on the value area below. Okay, so we are likely to test this extreme from Friday, so I'm expecting this thing to continue grinding higher. Not expecting the range to be dramatic, although in the overnight session it's already quite wide. The secondary is an open auction that pushes higher. If we get sellers interested, once again, they see this, whoever was selling on Friday sees this as another chance to bite at the apple. We get an impulse. I'm looking for pullbacks on the impulse, potentially the open or the opening swing low to get short. Looking for a what trade? What's the setup? A gap, an internal gap to settle. So I'm looking for this thing to work itself all the way down to the point of control, which is down here, and to settlement. So there's a statistic that's related to this. Poke through Friday's low, we get a lower high, lower low, and push and then come and close basically where Friday settled, and just continue on the same track that we're on. These are the two key scenarios. We're opening in range, out of value. We're opening above value. The expectation, because we are in range above value, very high expectation of a test of value. And then if we poke into value, especially with an impulse, I'll give you scenario 2, look for a gap to the prior point of control and a gap to settle trade as the key idea or key trade for the day. That's what I'll be looking for. Cool? Cool. So don't forget, tomorrow we're doing the polling again for St. Jude on the event contracts. We fixed a few things, and at 9 a.m. Eastern tomorrow, you'll be able to vote on 5 strikes. You can vote on all of them, 1 or 2 of them, products that you know, and we'll put those contracts on in a live account that EdgeClear has, a prop account, and the goal is to grow this account to a point where by December 30th, the last trading day of the year, whatever the balance is, including the initial deposit of $10,000, whatever that balance is, will be sent to St. Jude. Good luck, everyone, and I'll catch you tomorrow morning. Take care.